All right, the market selling off as fears over the deadly coronavirus continue to grip investors in China and around the world. Today's big drop, the Dow falling 453 points, comes when we kick off the busiest week of earnings season so far. 134 S&P 500 companies are set to release their numbers this week. But Carter Worth is here, and he says there are 5 names that you really need to focus on in the coming days. Cornerstone Macro's Carter Worth over at the Plasma to break it all down. Carter.
Well, we all know big is more important than small, and guess what? The market is so dominated, and everybody knows this, by the top names. And 4 of them report this week, Google next Monday. So in the next 5 business sessions, the 5 biggest stocks representing, as you can see here, 18.4% of the S&P, and more importantly, 1/2 of the NASDAQ 100. Top 5, 50%. So much hinges on these performing. And it's steep and uncorrected. Couple charts. Now, the 2 panel doesn't show this well. We'll zero in later, but this is a longer-term chart, 5, 6, 7 years of the NASDAQ 100, and the bottom panel calculates for us what percentage we are above or below the 150-day moving average. And what you're going to see here is that exactly 2 years ago, this is the 2-year anniversary of the January 26, 2018 spike, we got to exactly 15 per stop and stopped dead cold. Let's zero in on this and make it a little tighter. Here it is. This is the spike in January of 2018, and here we are now, and we literally got to 15% above and stopped dead cold. This, of course, turned down just like that. And so much hinges on these names, and my hunch is they're just, either way, we're putting in an intermediate top, whether they're all blowout or whether they all miss. And we can talk about that in a bit. But here is the setup for the S&P. It's fantastic. Just a normal garden variety give back in the event that this is an unhappy result for these companies would suggest a pivot back to the point from which you broke out. That's a 7.7% decline. We're, of course, already down 3, done half of that. For the NASDAQ 100, a higher beta and higher flying, the exact same setup, the breakout from the ascending wedge and a pivot back to the breakout juncture, which happens quite often, would be an 11% sell-off. I think that's the kind of thing one should be anticipating in the event of very good news or, frankly, very good bad news.
All right, Carter, why don't you come on over, guys? Let's trade this. I saw Karen Finerman. You were furiously scribbling notes down. Your take on Carter's 5 to focus on.
So I'm curious, though. I mean, it's interesting. The 15% is very interesting. So does it matter that Apple, which is already down from, I don't know, what, 323 down to 310?
3%? What is it, 2, 3? What's the peak to trough? Yeah.
Yeah, I mean, it's something, but it's not a ton. But do you think they're all going to move together regardless of earnings?
So if you look at the implied move of all 5, it's about 4.1% on earnings. And they all have earnings coming up in the next 5 sessions. Let's say they all do the maximum implied move up, or they all do the maximum implied move down. A thoughtful case can be made that regardless of that, either way we get a peak. Because let's say they're all fantastic, and they do what Intel did, and what Citrix did, and what Morgan Stanley did. Guess what that is? That would be a blow-off. Would be the steep move from October when you get further extended, and that's how runs end. Or let's say they all miss. The market slumps in response, meaning a case can be made that regardless of what happens, we're going to put in a top, or are putting in a top, independent of flus and viruses and force majeures that you cannot analyze.
But it was coming anyway.
Well, the flu? Well, the flu maybe too.
Not.
Hopefully not. But yes, that the market, well, think about it this way. On October 3rd, before this whole thing took off, and you guys were speaking about this, right? The market on a trailing 12-month basis was unchanged. S&P was unchanged. But from October 3rd until this just recent sell-off in January, the S&P was up 16%, annualizing at 50%. The NASDAQ is up 75% annualized. It was too much. And so I'm making the case that regardless of what they say, let's say they're all fantastic, that would be the culmination, or they're all poor, and obviously it'll be some blended. The market doesn't go higher. So what is the narrative to take you higher after having just pushed this high already?
Real quick, I mean, I'd say this. I don't know how you feel about it's not about the company Amazon, but I would submit this quarter, this release on Thursday, is extraordinarily important. You have huge double tops from the summer of 2018 around 2020, last summer around 2020. The stock has recovered off last earnings, but not that much. It's really seems sort of failing here. Is this quarter important for the stock Amazon.
100%. And it's tied to the weakest space, right? We know tech is good. Google is tech, essentially Apple, Microsoft. I mean, Amazon is the one that struggled, and Amazon will need to put up the best number, I think, of the bunch.
All right, Carter Worth, interesting stuff there. Big week for earnings, 134 companies. Carter, thank you.